Markets may not be worried about this next story immediately, but investors are certainly, all investors are watching as Elizabeth Warren is unveiling a wealth tax on Americans, a plan for a wealth tax, legislation for wealth tax on Americans worth over $50 million. Let's have reaction now from former New York Stock Exchange chairman and CEO Dick Grasso. Dick, thanks for joining me.
Jerry, always great to be with you.
So let's talk first about this wealth tax proposal. Elizabeth Warren made a big deal of it on the campaign trail all the way through 2019, 2020 when she was running. 2% tax on assets over 50 million, even an extra 1%, I think, on assets over $1 billion. Most people seem to think these wealth taxes are pointless at best because they're very hard to nail down. Most countries have moved away from wealth taxes. What do you think is going to happen to this one?
Well, I think she'll find a tremendous level of support in Cuba and Venezuela for the tax. Yeah. Having said that, I don't think the tax is anything.
They don't have any wealth left to tax in those countries, so it's no wonder they like it. Yeah.
Well, yeah, Jerry, I think the tax is just folly on the part of Senator Warren. You know, in reality, Americans aspire to wealth, whether you're at the bottom of the ladder or at the top of the ladder. And confiscating gains makes absolutely no sense. It's totally the antithesis of what America was built on.
What do you make of this administration so far, Dick? I mean, it is striking, but, Biden won the Democratic nomination supposedly because he was the most moderate. He was the one you could kind of trust, the most sort of familiar to voters, and who was going to, who might have been scared away by all these progressives with all their progressive plans for wealth taxes and for, unrestricted immigration and all the other kind of things that a lot of these Democrats were proposing. But he comes in and he seems to, first month, he's basically following the really the progressive agenda, isn't he, on all fronts? Markets don't seem to mind. They seem to be reasonably happy. But what's your take on it?
Well, I think markets are basically looking at the economic fundamentals, a reopening of our economy, a Fed accommodative policy. But at some point, the market is going to look at and look for the moderate Joe Biden that got elected. He certainly hasn't, performed as one would have expected a Senator Joe Biden, a former Vice President Joe Biden, to have acted. I mean, some of the things that have happened in the first 6 weeks are absolutely the opposite of what most people expected. And, you listen to some of the commentary out there, Jerry, and I suspect that a lot of Americans who supported President Biden are now in a period of buyer's remorse.
Dick, let's switch gears a little and talk about regulation, which is another thing that the Democrats obviously generally seem to be very enthusiastic about. Robinhood and GameStop mania, which we saw so much about a month or so ago, they're expected to take center stage in Washington again this week as President Biden's top Wall Street watchdog picks for both the SEC and the CFPB, they head to Capitol Hill for questioning. And they both seem to be quite enthusiastically received, again, by the progressives in the party. That's Gary Gensler and Rohit Chopra, for these two positions. Do you think this is, again, a sign that this is an administration that's looking for a pretty aggressive financial regulatory approach?
Well, I think that let's start with the SEC and Gary Gensler. He's got long experience in financial markets, both on the equities and on the future side. Jerry, it's important to have high-quality, investor-sensitive regulation, not a political theater, which we're going to see in the confirmation hearings, but the two nominees for CFTC and Gary at the SEC taking a real constructive approach to what's happened, whether it's Robinhood or any of the e-commerce platforms, and asking a simple set of questions. What's good for public confidence in the markets? Not, if you will, draconian regulation, but intelligent investor protection. And if they do that, it may not satisfy the progressives, but it'll certainly satisfy the markets and help this new generation of investors that we've seen, whether it's through Robinhood or some of the other platforms. So I've always been a great advocate of quality investor protection regulation, but draconian measures just designed for political purposes make no sense.
Just very, very briefly, Dick, has got to go. But the episode over Robinhood with the concerns that people had, did you think that revealed fundamental market failures that need correcting by regulation?
Well, there are a couple of quick observations. Number one, when you have hypervolatility, Jerry, the markets and the Fed should work together to impose 100% margin. That takes away the borrowing capability, whether investors are borrowing from their brokers or from their grandmothers. And on the flip side of that, for the short sellers, there's got to be enforcement of the so-called prior borrow or locate rule, so that you don't end up with 150% of a market capitalization of an issuer being on the short side. That's against the law. That is naked short selling. Just those two principles, I think, and then allowing the free market to function, everyone benefits.
Dick Grasso, thanks. Good advice there. We'll watch those hearings later in the week. Dick, thanks for joining us.